Good morning, welcome to the Phoenix Blue morning update on Tuesday the 31st of January. I'm Tom Colley and I will be talking you through the markets this morning. Well, it's the last day of the month, the first month of the year obviously. It's been a predominantly quiet month. There haven't been a lot of concerted opportunities in the markets, possibly to be expected with the inauguration of Donald Trump and the markets waiting to see what he actually delivers relative to his policies, etc. What we have seen is the movement we have seen has to a great extent been politically driven, and a good example of that would be recent pound strength on the back of Theresa May's clear indication that the UK was ready and willing to leave the single market. That, I think, is going to be an ongoing picture, certainly for the first few months of the year. Obviously, we've got that scenario with Brexit, we've got the scenario with Donald Trump, and we've got forthcoming elections also in 3 major EU countries. So it may be that political events are what drives the markets for us for the majority of the year. Okay, let's have a look at the news we've had so far today. There wasn't anything significant on the list yesterday. This morning we've had the Bank of Japan rate statement and policy statement. Everything was held pat as was expected. The Bank of Japan have been benefiting from the strength of the dollar post the Trump election. This ostensibly doing a proportion of their work and their lifting for them. Harada, the chairman of the Bank of Japan today, was laughing and relaxed in his press conference. However, he was saying they were only halfway towards their inflation target. And that their policy on FX was not related to their fiscal policy. Okay, going forward for the rest of today, shortly we've got ECB President Draghi speaking at a joint conference with the European Union. We'll be watching for him to reiterate what he said at his last press conference, which was that the Eurozone still required the stimulus from the ECB, despite rising inflation and concerns in that respect, particularly from the Germans. We also have this afternoon GDP from Canada, US consumer confidence, and employment and unemployment from New Zealand a little bit later this evening. We'll also be listening out for the words of Governor Pollers of the Bank of Canada. Last week at their rate statement, he suggested that a further reduction in rates still remained as a potential on the cards for the Bank of Canada, particularly because of the uncertainty of the effects of the new administration in the States, which obviously is their biggest trading partner. So they would see potential risk on declining trade with the States. Worth noting, again, we've got bank holiday in China all week, the Chinese New Year, but we do have overnight we have the manufacturing PMI data coming out of China. That's always probably the most significant data we see from there. Anything above 50 is perceived as an expansion, and we've been seeing some decent numbers in the last 6 months or so on this after a concerted period where it was borderline expansion or contraction. Over to the markets themselves from yesterday. Well, we saw as far as the dollar index was concerned, we saw a move up followed by a move down and then a return basically to where we started. So we had basically a doji yesterday, no indication really of direction there. It is that last day of the month, so there could be some unusual moves in the markets over yesterday stroke today. And obviously, this market is influenced by what Trump's doing. There's been some concern in the markets about his controversial immigration statements, or what's the word? The legislation that he signed off restricting some Muslim immigrants from some Muslim countries over a short period of time. You'll have seen in the news there's been a lot of uproar about that, and the markets have to some extent been reflecting that potentially. Over on the yen, we've actually seen yesterday we saw a strengthening yen despite the dollar being more static at the end of the day. We've got the dollar strength coming to the downside. You can see we've got an entry at these lows here, and that we'll be looking to take back to the top of the range there should that come down to that sort of level. Over on the euro, well, we talked about this rising wedge for a few days. We got a break of that wedge yesterday, but we got a price came right back up again, virtually within it. But it looks like we're now beginning to get the retest of that, the wedge and this level through here at 107.10, 107.15, which we'll be looking for intraday opportunities to the downside in this market. That will be alongside the Swishy trade that triggered yesterday at this 99.50 level. That has been on our charts for the last couple of weeks. We have clearly dipped down into that. We've got a falling wedge here, so we'll be looking for follow through here to take the downward trend line of the falling wedge there to take it further to the upside. Our immediate targets around the parity 1.040 where we can see resistance here. The other area that's interesting yesterday or already this week through Friday, this is the S&P. We've seen a sell-off in all the equities indexes. That doesn't just go for the Americans ones. We've also seen the DAX sell-off. We've seen the Nikkei sell-off, which we would expect in the light of the yen strength that we've just looked at. The interest from this point of view is, as I think Mark mentioned last week, at the inauguration of the last two presidents, we've seen equities sell off in the region of about 4%. That calculates to be around this level where we've got support here about 2180. So that's a key level for us. We'd like to see price back down there before taking this back to the long side and potentially to new highs. In the short term, however, that gives us the potential for a risk off scenario. This is gold. Technically, gold, you would be looking to take it to the downside. We had if you look at the weekly chart, we've got a down bar for the whole week last week. However, in the light of what the risk on, risk off scenario potentially has been, we'll be looking for those indexes to break lower and a clear close above this 1200 dead big round number, significant level here, and with the potential taking it back in the first instance back up to the 220s there. Then it will depend exactly what the equities do and if we maintain a risk off environment, whether we see gold going to higher levels from that point on. So again, this was technically a short market, but because of that sell-off in equities, and we'll be looking for that follow-through, we're not looking to jump in yet, but 1200 is a big number. It's always been, certainly over the last 2 or 3 years, it's been a very significant level in gold, so we're watching price at that point. Okay guys, that's it for today. Just a reminder, next week, next Thursday the 16th of February, a free trading event in London. Chance to trade alongside the Phoenix Blue fund managers to learn a lot more about the techniques, how we analyse the markets and how we actually trade our analysis. As I said, it's absolutely free without commitment. If you'd like to come along, please either email us at info@phoenixblue.co.uk, just headline your email free trading, or go through the contacts page on the Phoenix Blue website, which is phoenixblue.co.uk. Okay, hope that we'll see a number of you there. Thank you for listening. That's it for today, and we'll look forward to speaking to you again in the morning. Take care. Goodbye.